We continue to see volatility in the markets. Crypto is recovering. Equities are retracing yesterday's gains. We're going to be discussing all of that. Moody's throwing some of these banks for a little bit of a curveball, talking the El Niño trades that we love for this year. All of that and more today on Money Never Sleeps. God, that gets me jacked up every time, Kevin. It's never going to get old, buddy. As we get going today, everyone, hit that like button, subscribe to our channel, drop some comments. We want to make today kind of interactive, get you in on the discussion as well. Nothing Kevin or I say on this show is financial advice. We're not financial advisors. We're discussing what we're looking at in the markets, the trades that we're making, but that does not mean that you should tail us. Do your own research before making any buys or sells. Kev, we got some news last night. Real quick, the GMs, we got to say hi to everybody. Randy, good to see you. Mr. House, you as well. Anyone who pops in, say hi. Be happy to shoot the shit. We got news last night from Moody's. I guess we'll call it Moos from now on. Moody news that they're downgrading 10 banks, some smaller ones, some mid-sized ones. But the reason for these downgrades are higher funding costs, possible regulatory capital weakness, and, like we've discussed before, increased risk associated with commercial real estate. In addition to those 10, there are 6 more banks, including big ones like U.S. Bank and Bank of New York Mellon, that are being reviewed for a possible downgrade, and 11 additional banks, some of them being Capital One and PNC, which are now classified as having negative outlooks. So the expectation that everything was fine and dandy in banking that you and I were calling bullshit on, and everyone else on Bloomberg and Wall Street was like, no, it's all fine. It's behind us. We're moving forward. Not so fast, my friends. So a little bit of worry there. Banks are getting hit hard today on the trading day as we wrap up the last hour of the day. What else are you looking at right now, Kev?
In the words of Steve Crow, short the bank stocks. That's one of my favorite parts, the fucking big short. Just short the big stocks and wait. But yeah, we fucking called that a while ago, right? I said that let's not get carried away. Let's bank's been kind of quiet lately. I don't think we're out of the woods yet. And again, it's no different than 2008, right? Fucking Bear Stearns, quiet as could be for like 5 months. Next thing you know, fucking Lehman Brothers, AIG, all hit at one time. Is that going to happen this time around? I don't know, but we're definitely starting to see some movement in the banking sector. So thumbs up for both of us for just calling that out. But yeah, I'm just looking at the market today. Clearly, someone took profit in the Dow. It was down like 420. I thought I saw at one point, pretty much erasing all of the gains from yesterday. It's coming back now. People are buying. Good luck to everyone who's buying. I'm not saying that's good or bad. I really just think that we saw a massive move to the downside this morning. It's likely because people are trying to get out of their positions or maybe deleverage a little bit after seeing that there's probably going to be a lot more news coming along with the banks. But yeah, I'm looking at that. I'm looking at crypto as well. Crypto definitely saw some money flow in. It's kind of funny when we look at how much money has flowed into crypto. It's $21 billion has flowed into crypto in the past since last night's close. But the funny part about it is 4 million of that is in altcoins, 4 million of that is about Ethereum, and the rest is all in Bitcoin. And so maybe some of your altcoins are pumping a little bit right now, but guess what? Bitcoin's doing most of the work, and we're starting to see the dominance pick up. It's not a good place to be. So if you want to be cheering about a couple of green candles, be my guest. I think Bitcoin dominance is up only from here, but what do I know? I'm not a financial advisor. I'm just a virgin.
Yeah, Solana having a nice day. I haven't looked at the chart for Solana in a long time.
Yeah.
But I did not realize how crazy that green candle was back, for
XRP?
the XRP news. And then also on when was this? Yeah, I guess it was that same one on that Thursday, getting up to like past $32. Having a nice day now, though, up 6.3% in the last 24 hours. That is very strong. Bitcoin, once again, knocking on the door of 30K, so it can once again get rejected from 30K. Ethereum having a nice day at 1860. But if we look at equities, they're actually recovering a bit. The Dow was down over 400 points at one point.
Yeah, it's recovering.
Once again, people overreact to stuff. Like these banks, maybe they're not all going to be fine. But the news on this always sends things way too down, like down too far, too fast. Our buddy Mr. House capitalized on it with Coinbase back when they got hit with that lawsuit and it tanked to like $50 a share. There was probably an opportunity to buy some of these banks when that news first came, when the markets first opened and they were all getting crushed. Maybe you want to steer clear, but I think once again, some of this is overreaction. There's a proper level of reaction to it, and that was overreaction right off the bat. So let's not get too carried away here. Outside of that, we had, once again, it's the banking concern pumps crypto. People realize, oh yeah, if I can self-custody my money, maybe that's better than keeping it in a bank where I don't really have much visibility into where that money is being put and what kind of risks that bank has taken. So once again, never a bad idea once you're comfortable with it to self-custody your money. And I recommend learning how to be comfortable with that, learning how to protect your assets and hold on to them. Because if the shit hits the fan, guess who's getting bailed out? The banks. Guess who's going to get left hung out to dry? The people who are the customers of those banks. Yep. So please do not, once again, not financial advice, but keeping all of your money in a bank is just not the way to go. It really isn't, in my opinion.
Yeah, definitely have defensive assets, right? They always say diversify your wealth. I'm not going to tell you what you should or shouldn't do with it, but for me, I think that if you're in a bank, I wouldn't keep all your eggs in one basket, right? I definitely don't. I think I'm a little bit more risk on as opposed to that right now. But I don't trust any of these banks because we're also seeing, and we love to talk about her, Liz Warren. She's even saying some shit right now about how these banks are not making some of their deposits on FDIC to make sure that they're fully insured. She's not wrong there if that turns out to be true, but it just seems like a lot of banks are being a little bit more risky than they should, or they're trying to cover their asses in a point where it's like, okay, let's just try to make sure that no one really withdraws anything right now so we could stay afloat just a little bit longer until we figure this shit out. So maybe they're not putting as much as they should into that fund. It's a little bit dangerous, especially with what we're seeing with Moody's. And maybe that's why we're starting to see, them downgrade a lot of these companies or these banks, right? And again, I saw a lot of people on Bloomberg saying that, seems a little bit delayed. Like this shouldn't be even a problem anymore. It's like, well, there's a reason why it got downgraded, right? Because their outlook is probably still bleak despite what's happened in the past. And going forward, they see the entire macro conditions probably being a lot more negative for the banking sector. So not surprised by what's going on, but yeah, definitely protect yourself.
Absolutely. Let's talk about the Fed for a little bit. There hasn't been a whole ton of data so far this week, but we have heard from Fed presidents. I'm going to mess their names up. Harkin and Barker. Once again, the magic duo of Harkin and Barker. You can find them at the MGM Grand. They had some talking points today around what the Fed is going to do in September. And we heard kind of some mixed messages there. Fed President Harker. Oh, it's Harker and Barker. Jesus Christ. I can't even get these names right. Harker stated that he feels comfortable leaving rates where they are and that he believes the Fed has done enough. And his counterpart, Fed President Barkin, is a little bit more on the level-headed side in regards to we're going to continue to wait and look at the data because that is really all we can do. There's a lot to come out. Go ahead.
They shouldn't have these people speak on the same day. This is a fucking field day for the news. They're going to be calling these motherfuckers opposite names and shit like that. They literally sound like, I don't know. Whenever I think of their names, I think of like Ringling Brothers or like a circus. Yeah. But yeah, they shouldn't have them on the same day. That has nothing to do with finance. I'm just being an asshole.
But this goes back to it's all going to be data dependent. Like,
oh fuck.
I think the guys who are like, yeah, we're done. Like that seems incredibly unreasonable. And you're just telling the markets and the media what they want to hear, as opposed to no, if we get a bad CPI print this Thursday, there's still so much data to come out between now. It's 42 days until the next Fed meeting. Like there's so much to come out. There's CPI on Thursday. There's going to be PCE later this month. There's going to be CPI again and another jobs report next month before they meet. So we can't get ahead of ourselves here. We continue to be data dependent. That being said, it does feel like we are hopefully moving toward an end here. But even if it is an end of the hiking, everyone is on the same page that these rates are going to be higher for longer, and that is going to continue to put more stress on consumers who are carrying a now all-time high. Congratulations, guys. $1 trillion in credit card debt. We did it.
We fucking did it.
We fucking did it. We're number one. In the words of Kamala Harris, we did it, Joe. $1 trillion in credit card debt for U.S. households. You love to see it. It's just, what could go wrong? Everything is fine and dandy. Ignore the fact that student loans are coming back, and that's going to be even more debt that people have to deal with. We're okay. The economy's fine. The markets are back. Revenue's pumping. Let's fucking go.
Yeah, I hope so. I don't believe so, but yeah, it's fucking wild, man.
Don't act like you hope so. You don't hope so. Like
no.
We all know that you're hoping that the markets finally take the dump that they desperately need to.
Let's put it this way. I won't get too much into the doom and gloom, but I do want to take a look, maybe Thursday after a show or during a show, take a look at some of the 10 to 2 year yield inversions, and we'll look at the history of that and seeing how these, accurately predict a recession, also a market crash. We'll look at, the major indices in comparison to that, mainly because I want to see what the CPI data is and see how this is going to impact maybe how long the yields are inverted. But as to what the markets are doing and consumer credit and everything like that, I think we all know where it's going, right? We're just, I don't know, sitting on a cloud and just hoping that, it doesn't rain and then everything just goes straight to the earth, because I think we are going to expect a big fall coming soon. It's a matter of time. It really is. We're starting to see the banks starting to see some pain, but yeah, I don't know, man. It's these rates are going to be higher for longer. It's not going to be good for the banks. And even if we're going to look back at some of the data in the past where they haven't cut rates, but we still saw a market crash, 1987. That's all I'll say.
Yeah, these rates are gonna stay up. It's gonna be a pain. Like, the housing market's gonna have to deal with it. There's gonna be a reckoning there at some point. It's like, God forbid you didn't lock in a fixed rate. Like, God forbid you have like a variable rate. If you're one of these strippers from The Big Short who has, 5 different condos that you have variable rate mortgages on, good luck. You're going to be doing a lot of dancing. Anywho, let's discuss our main topic today, which is the El Nino. We had a whole show about this a few weeks back where we discussed it on a global scale. But since Kevin and I are both in the States, most of our viewers are in the States, we're going to shrink it down a little bit because it's harder to invest in a lot of these areas globally when you're an American citizen. So we're going to focus on what we here in the States can do, what kind of plays we want to make ahead of this El Nino. It's been discussed a little bit. I think it's going to start to get a little bit more prominent. So if it's still possible to get ahead of some of these trades, we want to do that now. So let's first discuss like what the implications are, because we have some things we're going to talk about as far as like what we want to do, but we also are going to kind of discuss it together and see if we can come up with any other ideas. Because I think, doing this solo is one thing, but having kind of that back and forth is also very valuable in what we want to do on the show. So the implications being regionally here in the United States. In the South and the Southeast, it is going to be colder and wetter if we see an intense El Nino like a lot of people are predicting now. In the Southwest, they're going to see a lot more rain this year. And in the northern part of the country, it's going to be a lot warmer. So that is going to have an impact in a lot of different ways. Let's talk north and then work our way down. Okay, Kev?
Sure.
So we are going to see up in, let's say Nebraska, Iowa, the states even further north from that, that warmer weather is going to definitely impact crops and commodity prices. So that's one thing I know that you in particular have been looking at.
Yeah, it's definitely going to affect a lot of the major commodities that the U.S. is producers of. So that would be wheat, soybeans, and corn. And we talked about that in the last show. Main thing I was looking at is the harvesting time for which, some of these crops are supposed to be harvested. Corn tends to be, October into the later of the year. So it might be interesting how we're starting to see some of the impacts now, because again, we are in the El Nino season right now. Even though winter hasn't came yet, winter is when we anticipate that we're going to start seeing some of these major storms, some of these major temperature drifts, where we're going to start seeing areas that are typically dry be really wet, and areas that are typically wet be fairly dry drought levels. So those are the 3 that I'm keeping an eye on. We can pull up some ETFs that I'm looking at to see which ones are maybe, if you're a United States citizen, might not be a bad idea to take a look at. I got UNG right here, but let's pull up corn. I believe this is Tucrium, or I can't even pronounce that. I'm not gonna lie. It's just the ticker is corn, but it's an ETF. You can get in on Webull, Schwab, any of these places that are gonna trade the shit. But yeah, this is corn, and it doesn't have that weird units that we were looking at the last time we were looking at corn. This is in USD, so
Love it.
we could see that right now corn is fairly in the middle. The stochastic RSI on the weekly, the 15 to 200, it's just trading in between it. That gives me some hope because that means that there's probably some room to the upside above the 50 moving average. Let's look at the monthly. There it is. That's what I like to see. We're finding some support on the moving average for the monthly, the 50-day moving average. And, maybe we have a little bit more to come down on the weekly. Maybe we test that 200. But I think if we do test that 200, there might be an opportunity to maybe get in at some decent level. I'm not going to really speculate as to where this price could go. I just know that if we do start to see low supply and high demand for some of these commodities, that's going to generally drive the price up. So
can we look real quick? Can we look historically on there when we've seen previous El Ninos and what the price action has been at that point?
Yeah, sure. What was the previous El Nino? Is that like 2014, 2016?
Let me pull that up real quick. Keep going, and then I'll pull up the year for that.
What the hell? Sounds like someone got arrested.
What was that? My phone just got real weird for a second there.
Anyways, back to corn. This is so I'm looking for, obviously we're finding some support here on this 50 moving average. Again, I'm not going to necessarily go crazy into telling you where price can go. It really does depend on what the demand is versus the supply. So if we have a really bad or extremely bad winter, it fucks up with the harvesting season for corn, or even just next year when it comes to like planting some of this crop. That's definitely going to make a huge impact. It really depends on the weather and how bad, certain areas are affected by this. So
real quick, we look at 2014 to 2016.
Yeah, you got it. This is on the monthly. So we go 2014. I'm assuming 2014 going into winter.
Mm-hmm.
All right. So we can see that it was at 23, and the next month it shot up all the way to about 26.24. Okay. And right around the winter time, it starts to tail off a little bit. Picks up again back in like summer, and then comes back down. Okay. So that was the main thing when I was looking at it. It really depends on time of the year that you're getting in and out. Like I said, it usually picks up during harvesting, because then that tells you how much they actually are able to acquire during that season. So I think that if you do get into a price where it's fairly cheap now, I don't think it's a bad idea to hold on and see how price reacts going forward into November, December. I do think that there is going to be a sell-off at some point where there just isn't the amount of demand, and it's also out of the season. But for corn, this is not necessarily one that I'm super gonna get into unless I see like a really good entry point. And right now, maybe the 50 is holding up as a pretty good level on the monthly, but if we look in the weekly, I do think that if we can hold this range right here on the 200, if we don't get any dips and the stochastic RSI does pull down to that point where it's oversold, maybe that's a pretty decent level. So what would that be, around like $21.50 to like $22 per share on this ETF? Again, this is it looks like it's got good support here too from May 2021. And again, we are definitely heading into just a peak time for a lot of El Nino to pick up. It usually picks up in the winter. That's when we get a lot of those crazy winter storms, right? So definitely going to start seeing some fluctuation prices with corn. Let's take a look at some different ones though. Let's take a look at soybeans and things. Yes, same fund. I really don't know how to pronounce it. It's TEUCRIUM, and then it's just like an ETF. But yeah, let's take a look at this on the weekly. Let's go back to 2014. And we can see that in 2014 right here, picks up going into harvest. October, picks up a little bit, and then it does come down a bit. And it seems like it picks up more during certain areas. So I don't know if it's necessarily El Nino that's affecting this as much. Maybe February of 2016. I know that is the El Nino year as well. It did see a bit of a spike up. So maybe that's when we started getting some storms. So it really depends on when a lot of these storms come in too, right? Because if we have it where it's like, okay, we're in the El Nino season, but we haven't seen anything that's really affected the temperature or a lot of the crop yet, it could still play out over the next year or so. So definitely keep an eye on that too. I do think that this El Nino year is going to be pretty hectic though, because it's the first time that the Atlantic waters are pretty warm too. So now we've got the Pacific and the Atlantic, playing a pretty important factor. We haven't really had a year prior in the history of El Nino that we, at least on record, where we've seen that. So that could cause some really major winter storms. And I think that's more going to affect a lot of where the Midwest to the Northeast is. But again, that temperature shift and pressure shift is definitely going to affect a lot of what's happening in the West too. So definitely going to keep an eye on that. But soybeans, I just want to look at some of what might be a good entry level.
Also, it looks like the U.S. imports significantly more soybeans than it does corn, just for
Interesting.
reference there.
Yeah, definitely. And I'm assuming that's importing soybeans from probably like China.
No, what I just found, the biggest importers were from Canada, Brazil, Argentina, Ukraine, which is going to be harder now,
Sure.
and Turkey.
Interesting. So Canada definitely would be in the same boat as the U.S. then. Yeah, obviously we're just regionally locked right next to each other. So that'll be interesting to see how that plays out. Ukraine definitely is. Ukraine might even be a reason why we're seeing some of this price and be pretty overbought for soybeans currently. So yeah, this might be interesting to see. Hold on, let me just pull this up. This little article right here. It says corn wheat futures surges rest of July, seen drier and hotter for U.S. crops. Yep, that pretty much tells you that it might be a bad harvest. So keep an eye on that. And I'm using this right here, this data right here from Seeking Alpha. Again, thank you, TradingView, for throwing those little articles in there. Sometimes good to read. But yeah, soybeans, looking on the weekly, it's overbought. If you look on the monthly, it looks like there's still some room to the upside. So I'd be interested to see if we do get maybe a pullback down to maybe the 50 on the moving average on the monthly before we see, or on the weekly. And then the monthly would be, primed to go up because the weekly is overbought, and I guess the 50 on the monthly would be the 200 on the daily or on the weekly. So maybe we test this, and then if we find some support there, that might be a pretty good sign that there is going to be some demand for soybeans going forward. And that could also be because low supply, high demand.
Okay, so we talked about the northern states. Let's get south a little bit here. Throughout the southern part of the country, colder and wetter. That could mean, we all know how bad the power grid gets in Texas when it gets really hot. Yep. And we could see a similar impact when it gets really cold. When it gets cold in Texas, things do not go well. So what are we looking at there? We're looking at things like natural gas, like oil. I know that you've been you're a big natural gas guy now, Kev.
I am. I'm a gas guy.
Fun story about me. In fourth grade, my teacher decided to ask the classroom, where does natural gas come from? And I started laughing so hard that I got sent to the principal's office. So there's your fun fact about Jeremy for the day. Go on with your TA about natural gas now.
You laughed so hard that you became a producer of natural gas.
I sure as hell did. I mean, come on. You ask a classroom of fourth graders, like, hey, where does natural gas come from? And you don't think you're going to get people laughing about it? I mean, be realistic here.
You could have bottled that stuff and sold it last year, man. But yeah, looking at this on the weekly, we could see that we are heavily, we've heavily made a major correction since last year. And a lot of this was due to the war in Ukraine, just affecting production and, importing a lot of LNG. But if we look at this on the monthly, we're primed to go up. I've been saying this for months. I was so bullish on natural gas back in, what was this? Probably like March, around the same time that we were talking about being oil barons, and it was at $1.92. Currently, it's at $2.78. I think that this is going to go up continuously going into.
When you say things like when we were talking about being oil barons, you make us sound like we're just kids over here playing oil barons at lunchtime. Okay.
I didn't even know that was a game. I was like, that song by the Spin Doctors, Two Princes. That was about us being oil princes, oil barons. Prince of Oil. But yeah, anyways, I'm looking at this natural gas chart, and I think that it's been heavily oversold for a long time, and we're starting to see that natural gas has been starting to pick up because a lot of Texas has been extremely hot lately, right? So it's hurting production. A lot of energy is reliant on natural gas in Texas. I believe it's 44% of their energy production or energy for Texas is methane, which is a natural gas. If already produces a greater deal.
Look at I mean, Mr. House I'm not even going to look it up because I'm just assuming that Mr. House is giving us good information here. One thing I also was reading up on with natural gas was we've seen it sell off so hard due to the fact that it has been warmer winters, so there hasn't been as much need for it. And there's just the supply has been really high. That being said, if we get into this, we all know how, Florida people, if it dips below 50 degrees, you'd think that they were like freezing to death. They're very soft people down there. So we all know that they're going to get their heaters running as soon as it dips below even 60 probably. So watch out for that. But yeah, I think this is a really sharp call on your point, and it looks like the technicals back that up as well.
Yeah, so the one ETF, because I can't buy natural gas unless I have a guy fart in a cup, and then I like buy it off him on the street. Which I don't like to trade illegally, guys. I like to use the exchanges because at least I can track my profits and my losses. But yeah, I'm looking at UNG, which is United States Natural Gas. It's an ETF. But I bought some of this the other night. It was at $6.97. Bought it in after hours. Next day shoots up to 740. So I was like, all right, let me sell, get out of here. I think that there is going to be a correction at some point, even on the smaller time frames. Today it's 748, so maybe that was a bad call, but whatever. We're not looking back, but I can look at this, and this has been the chart for the past few days, weeks. And this has been since March, when I think that it started to bottom out. And we can see that we're in this range. We're hitting our head, ass. This, I think there might be a little bit more room to the upside before we maybe fill some of these gaps. But I'm also
I know it was a joke. So that was a joke. I was like, yeah, no, I'm aware.
I didn't see. I was looking at those charts. But yeah, so I think that we're in this megaphone pattern. Head ass. I think we're going to break from this at some point. I'm hoping to pick up some more, maybe in some of these gap areas. I'm hoping that we get a little bit of a pullback, maybe into the sixes again, just so I can load up a little bit more on natural gas. Where could that lead us? I think that if we're looking at where last year was, and there was, such a high demand, or there was demand with low supply with what happened in Ukraine, that could potentially lead us to a double top. I'm not saying it's going to happen, that's going to go there, but I think that we are going to see colder winters this year, mainly in the US and places that, like you said, that usually don't get it because of a lot of the weather, and also the waters are extremely warm. We could see that shift where some of the cooler areas come from, the north, and we get some really bad snowstorms. I think that the regions in, the Midwest, like where I am, Illinois, Indiana, Michigan, all those might see some really bad winter storms. We could see the same thing in the Northeast. We could see bad nor'easters. We're talking about hurricanes. So a lot of things that could really mess up, and power is going to be, energy is going to be really important. So with UNG, I'm looking at this. I think that there are some gaps to the north that we have to see about filling, probably in like $13 to $14 range, even a little bit more here in the $15 range. So I mean, if you get it in at like say 650, it goes down to some of these gaps, we can pick some up there. That's a pretty good return, I think, for energy, especially if this is like just a defensive play, expecting us to move forward with El Nino. That could be 100% return, maybe even more if we're looking at some of these higher levels from Ukraine. And again, the thing that makes me bullish on natural gas is how China has been buying it like crazy, to the point that they are pretty much a supplier now of natural gas. Yeah, I mean, we're talking about like almost 300% if it goes up to even, $24. But China probably knows something, and the fact that they're just loading up on this, and I know that they don't think in like decades or century, they think in millennia. These guys are loading up on tons of it right now. There's probably a reason why. They probably anticipate some type of escalation. That's been my theory this entire time. That's why we're seeing oil take up a little bit. We're starting to see energy take up. But yeah, natural gas, I think, is probably my biggest play of the El Nino trades. This is one that I'm definitely going to be loading up on going into November, December.
Are you thinking like 650 is where you want to try to buy?
I would like to, but again, I'm not going to get too greedy, because I do understand that if I'm right big, in the point where it's like, okay, escalation plus really bad winter, this thing could just be, supply shock, very similar to how we saw, last year, maybe even the year prior back in COVID. So even though winters have been warmer, I think this weather is definitely going to be a huge game changer. And again, I talk about Ray Dalio all the time. This is one of the dependencies that he takes a look at when it comes to nations, towards the end of them. It's just wild how natural disasters tend to be part of that. We start to see the fall of some countries. And for the U.S., it seems like this, along with war, along with, a failing economy, printing the most amount of money in history, it seems like everything's boiling up. That's a little bit off track, but for the most part, I do think that this is going to be something that does add to, definitely some economic demise going into the winter.
Okay. We're going to wrap it up here in a minute. I guess one final thing I'll say about it, continuing to look at Home Depot and Lowe's as possible investments here. 3 reasons. When it comes to the El Nino side of things, there's going to be a need for, people who are not in typically cold areas are going to need new things around the house. They might need some generators. They might need some other things. Help, say we got ice and shit, like just little things like that, which, seem small, but do add up, especially on the generator side of things. Number 2, it is once again a defensive position which I think people are going to need to move into as tech begins to come down. With mortgage rates high, people are going to continue to do home projects instead of buying new houses. Once again, benefit for Home Depot and Lowe's and other hardware store chains. And then lastly, but specifically with Home Depot and Lowe's, they continue to pay a strong dividend. I've talked about it before. I know dividend stocks are not the end all be all, but it is nice to get that little bit of money every quarter so you can then reinvest somewhere else if you want to. So just the two final ones, but I think Kevin made a very strong argument for natural gas. I'm looking at that in my brokerage account as we speak. I think it could be a good play that yields a very nice return in a short period of time.
Yeah, definitely. I think for natural gas, if we're looking at just the actual futures contract, just the last thing real quick, I think the key thing to keep in mind is where it potentially could go. Is it possible that we get a double top? I think so. I think that it's very possible that we get to that $10 range again. Again, this is going to be a really vital year. I think 2024, we're going to see a lot of price appreciation for a lot of commodities. I think commodities are the place to be. I'm not saying that that's where I'm putting all my money in, but it's definitely a place that we have to keep an eye on. But I'm going to say this range up here, if we're looking at just a natural gas contract, this is with Pepperstone. If you're in the US, obviously it's going to be different because we're going to be looking at ETFs. But this range right here from $7.65 to maybe about $10, I think is a good target range for where we could potentially see it. And again, that's based off of where the monthly is. I think that there is going to be some not violent price appreciation, but I do think that we're going to start seeing some price appreciation going in closer to those colder winter months. So that's all I got on terms of the charts. But yeah, I think that we did a pretty decent idea. If anyone else has any ideas where they might be putting some money, definitely drop it in the chat or, in the comments. We'd love to hear it. We're all about making money here and we want to see what the best plays are. Especially when we're being lied to by every piece of data that's been coming out every month. So definitely we want some defensive plays. I think that this is going to be, a good opportunity. And again, might not hit this winter, but it could be in the next few winters where El Nino is still here. So keep an eye on that. That's all I got. Natural gas I'm bullish on.
All right. That is going to do it for today's show. Randy, Mr. House, Ace, as always, appreciate you guys being here. Anyone else who watches it back, appreciate your support. If you have not yet, hit those buttons down below. Like, subscribe, drop a comment, share us out on social. Retweeting farting produces greater.
I love this so much. This should be
good.
fact.
This should be, if only it was. We'll be back tomorrow, same time, same place, seeing how the market's reacting. We're going to talk a little psychology tomorrow, an area that I find really interesting. Got a minor in it in school, so obviously I'm an expert on it. Not really, but market psychology is very, very fun. Similar to, when it comes to sports, gambling, all these things, this is a game that we're playing here with the markets, and understanding the technicals is important. Understanding the macros is very important as well. But the psychology that goes into, making a trade, executing, all the data in the world is great. But if you're psychologically not able to make some decisions, that's a problem. So we're going to discuss that a little bit on tomorrow's show. I'm looking forward to it. I'm
going to bring my brain for sure.
There you go. Get some sleep tonight, Kevin. So we're gonna get real big with our brains tomorrow. Have an awesome rest of your day, everyone. We'll see you tomorrow, same time, same place. Take care.
Take care, everyone.